We've seen the effects of this slide in land sales playing out in budgets because we've seen that spending slide just deepening in the data out on Friday.
Yeah, I think, but that's only probably part of the story, because if you even look at the general spending, it's also very slow this year compared with the progress in past years. So that's, I think, one critical constraint now is the local officials. They are not allowed to spend money, you know, in whatever way you wish, because there's how you're going to spend the money, what projects you're going to invest in. It's now under more scrutiny from the central government. So local government will be more cautious because you have to prove this project is, you know, worth for investing, that can generate revenue in the future. Well, it's not going to create another debt hole. So unless you can prove that, then, you know, local government would be very cautious of spending the money. So that, unless, you know, some relaxation on that front, we don't think. And another thing is, if you misspend money, or if you know, invest in something not really, you know, worth investment, and you will be held for accountability probably over your lifetime, right? Even after you leave the post. So local officials will still, you know, probably get punished for those misspending. So I think that's a very critical, you know, constraints on how local governments are willing to spend money. Although the budget set in March this year, I think it's broad enough, right? It's the budget side, the side of budget that should be big enough, you know, to spur the growth, to help the recovery. But we don't think we think a key constraint now is the local governments are very cautious in spending those money.
That's the fiscal side and the challenges that you highlighted quite well, Eric. What about the monetary side? I mean, this cut to the 14-day reverse repo. How should we interpret this move?
The bottom line, don't get too excited over it. It's not a new stimulus, not a new cut, because you remember last time they did 14-day reverse repo was in February, before Chinese New Year. So that's quite, it's quite seasonal, because they only do that usually before the long holiday. So now we have October Golden Week. So they want to catch up the 14-day rate with the July's cut in 7-day repo. And remember, they didn't move the 7-day repo this morning, so it's not really a new cut.
We had the scoop on Friday as well, this story from Bloomberg talking about weighing removing major home buying curbs to try and stimulate demand. You've written the reaction, and it seems like from your perspective, again, it's sort of could miss the mark here a little bit.
Yeah, I would say if they did that 1 year ago, that's probably more useful, more helpful. But now it's probably too late. And given, you know, another year passed on, and the sentiment was even weaker right now. And even, you know, relax the curbs in those larger cities, it's not help to resolve the nationwide problem, the oversupply issue, right? And we should know that the key oversupply is not in those top cities. It's more in those lower tier cities, right? So the demand is still, I think, quite robust in those big cities, but the thing is the fundamental demand is too weak in outside those cities. So, yeah.
I do also want to ask sort of about some of the risks possibly of this, because it's really interesting what you've written in your research, talking about that even if you loosen these rules, it can still come at the expense of smaller cities as well, and they're the ones that actually need that level of support.
Because everybody, you know, they hope for the big city, they want to buy a home there, right? So if you relax those for every people can buy homes there, then it will just attract buyers from, you know, outside the big city. But that's crowd out those demand, which are already even weaker in those smaller cities, right?